Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, December the 9th, 2025. As you know, today is Tuesday. Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. And before we get started, we discuss showing some picks. So first up, our turkey. Some people look at that and say, well, why is it not so brown over here? We do a Cajun injector. We did this butter jalapeno injection. I injected the breast all over the place, the leg, the wings, injected it everywhere. Then we cook it in a baking bag so it retains all the juice from the injected marinade plus the juices from the turkey. I do it in a bag so it doesn't get very brown. And then we coated it with our Cajun land spices inside the cavity and out. So all that juice collects in this bag, and I save it for my turkey bone gumbo, which we'll show you a picture of in a moment. So that's why our turkey doesn't look your traditional dried, brown, kind of crispy skin, because I prefer to save that au jus for my turkey bone gumbo. Another view of it, just tons of seasoning with that injected marinade. This thing was so juicy, you could see the juice. The juice would just literally drip off of it when you squeezed a piece of meat. The juice would come out. It never dry and always extremely tasty. This is our plate. We serve fire roasted corn with bell peppers. We had our Hawaiian stuffing. Then the sweet potatoes with the pecan topping. I did some Brussels sprouts with a bacon and cheese sauce that went over it. Of course, your traditional whole berry cranberry, the sliced turkey, and some turkey gravy. This was a bundt cake that Trish made. It was a butter pecan with this buttery icing. Fantastic. We topped it with some chopped up pecans, and it was a thing of beauty, very moist and very tasty. This is the gumbo. The reason I put the turkey in the bag, you make the au jus, you take what's left of the carcass and the bones and everything, you throw it in a pot, you boil it down, it makes a broth, and then you take that broth and mix it with the au jus from the turkey, and then you put everything under the sun. I start off with a roux, traditional Louisiana cooking, and flour, oil, and then you start a base, and we put Trinity in there, the onion, the celery, and bell pepper. Call that the Trinity. Then we throw all kind of other goodies in there, mixed vegetables, okra, whatever you got on hand, you throw in there. All the different turkey meat. We do this jalapeno Holmes. It's made from Holmes, a company here in Texas, and it's a pecan smoked jalapeno sausage. There's a lot of the darker pieces in there, a bunch of sausage in there, and ooh, you talk about good, tasty, and wonderful. So this is what we were doing for the holidays, and this is my pride and joy. We made 2 huge pots. We ate one of them, and we froze the other one, so we're in the mood for some turkey bone gumbo. You can always take out a little serving and heat it in the microwave, and it tastes just as good as when it was freshly made. All right. And last but not least, after all that was said and done, I did this shrimp po' boy, and this is your popcorn shrimp. And here in Texas at, I think it's Tom Thumb is one of our grocery stores. They do this cheesy jalapeno bread. And you see the jalapenos on the top. Let me get my big cursor in there. See these big jalapenos with the cheese. And there's a po' boy bread. And this is my shrimp po' boy. And of course, you got to put a little ketchup on there, a little hot sauce. But I ate that in celebration of a wonderful turkey dinner and gumbo. I just wanted to feast your eyes on some of the things that we produced, and we'll take it from there. And Emil says, already salivating, painful. Cake, wow, love it. Thanks for showing. Yes, that was Trisha's pride and joy here. Let me get back to the cake. This thing turned out really well. We decided to do a bunt. Normally we do like the multi-tier cake. We decided to do a bunt cake style this time, and it turned out fantastic. And I love pecans. I think that's one of my all-time favorites, butter pecan ice cream, just anything with pecans in it. So when I found that smoked pecan smoked jalapeno sausage, that went extremely well in that turkey bone gumbo. Fantastic. All righty, well, let's continue. And last but not least, this is a picture of Trish and I. We're in the festive holiday mood, getting into the Christmas spirit. We're out and about, and we took this little picture, my beautiful bride and myself, and we appreciate your thoughts and comments. But here we go. Let's get to the markets, and we'll switch over and head to real brief dollar index. Is this the end of that wave two? And we are going to go breaking out, Alan, or this two is going to continue to push lower? I think we're definitely going to finish this somewhere between this level and this level. And I don't think this is over. We've been stating it. You go back a few months ago when we made this low here and we started to rally. I kept saying, I don't think that's the end. I think we're going to go lower. We did make a slight lower low. So I moved this little wave two over here. So I still think that at some point, this destination two is going to end, and we are going to go breaking new highs. Question is it here, or do we still go lower? I still think we're going to go lower because that recent price action doesn't look like this is a reversal to go breaking out. And it's hard to see it on a monthly. It just looks like a reverse hammer, a croquet, or whatever you want to call that. And then it looks like it's going up with a small pullback. But on the lower time frames, we'll go over to the charting platform. When we start to look at this latest price action, it's very much overlapping. We got a little bit of a bounce. We pull back. We went higher. We pull back to overlap. So let me get my little marker and my little lines. But during that original, you see, we did make a new low, so that couldn't have been the wave two over here because 1 pip lower, 1 point lower, that two can't end there. Could it end here? Well, the moment we get 1 point lower than that, then that two has to shift over again. So this is why I don't think, initially we talked about this one. The reason I didn't think that was it, we got a nice rally out, we retraced, then we got this. And the proportions of this A equals C was very commonplace for it to reverse. It reversed. And Alan, what happened? From the low over here to that high, we broke that 618 over here, and that stated we were likely going to make a new low. Typically, you go down to this target down here. We didn't quite reach it, but at times, all you got to do is make a new swing point low, and that could end things. This thing could have been the wave two here, and we're going breaking out. It's still a very low probability this is the end of that wave two, and we're definitely going breaking out. It's much higher we're going to break down. And the reason, again, is you go back and look at that. So we're going to remove this one. And from this swing point low, we have that overlapping price action. We got to move up, a little retracement. That part was fine. This third wave move. But if that was going to be the wave four, we went into the area of wave one, so we overlapped right there. See it? Went up, came back down, overlap. Then we proceeded to go up and reach the Magic Fibo. We pull back, we overlap with that high. So the first move up, first pullback, next move up, next pullback, overlap. Next move up, next pullback, overlap, overlap. So it continually is overlapping. First move up here, next move, overlap from this too. Next move up, overlap. We overlap with this move. We proceeded to do it again. We pull back, we overlap with that move. And then basically a slight higher high, double top kind of thing, reaching that big resistance zone we reached before. And then we pull back down below the Magic Fibo. While we're below the Magic Fibo, that's more bearish than bullish. And we didn't quite get this move yet from this recent low up to the high. We didn't take out that 618 right here around that 97.80 area. Like we did on this one, we made the move up. We pulled back from that low to high I showed you a second ago. We did close below that 618, which meant we're likely going to make a new low. We ended up doing it. Well, this one we haven't gotten there yet. But if you incrementally move these, and this recent low here, which was this last correction, we did take the 618.786 one out. And where did we go down to on that push lower? To these extensions. Can't make this stuff up. It's insane how accurately this works. 75% of the time you go to 1448, 70 plus you go to the 1.272. So we reach those targets and we're kind of bouncing. So this initial move said we were going to go down here. Well, if you continue to move this and you come to this next swing point, which is right there, we again took out the 618. We haven't reached this extension right here, 98.30, 98.06. So the probability that we make a lower high, lower low to come down here is sitting at a 75% chance. So I like the odds that this is going to continue to fizzle and drift down to this section. Well, you continue to rinse and repeat. You come down to this swing point, and just the other day, that red candle did just barely close, but it was below that 618 level. You can see right there, this green line is the 618. That red body of that candle closed below it right there. So now, Alan, it looks like we have, right, Ian? Looks like we have a 75% chance we're going to go toward that 97.68, and a 70+% chance we're going to migrate down about that 97.30 area. Well, why is that important? Because if we get down to these extensions here, we're below the 618. All right, ladies and gentlemen, picking up back with the dollar index, we were discussing how this recent swing point low to high, we broke the 618, we went down to the extension, we moved it to the next level. This is this swing point low, which that red candle right there actually closed below our 618 level. Doesn't have to do it, but it's the body of the candle, not the wick of the body, but the actual body of the candle. So that closed below the 618, giving us a high probability, 75%, we're going to go to 97.60. 70 plus, we're going to go to 97.30, which in turn, if that happens, which is a high probability, that would break below the 618, which is at 97.80 area of that low to high. And if that happens, then it says high probability. Yes, next level would be 1448 down below 95.60, which be a new swing point low. And like I was calling for with that swing point low here, we were likely going to get a new low. We eventually got it. Now, this latest overlapping move we were discussing, every time it went up and pulled back, it overlapped, went up, pulled back, overlapped, went up, pulled back, overlapped. This is not very bullish for this thing to go breaking out. It's more bearish for this thing to go down, right? So far, so good. So in my humble opinion, we went short the dollar index, which we went long the euro dollar and pound dollar, and we're just sitting here kind of chopping. And the bias is based on this recent price action, we should go lower. And if we do reach these extensions down here, that puts us below the 618 of the bigger low to current high. And that would state we're going to make yet another new swing point low. Fair enough? So the bias is, again, back to our bigger picture. The bias is this wave 2 is not over, but just remember at some point this wave 2 will end at some point, and then we're going to go reversing. So that is the plan. Once wave 2 is over, we will go breaking above 114.72. I'm just not convinced, as I was a few months ago, that that was the end. We ended up getting a new low. I'm just as convinced, based on that recent lower price action, showing that it overlaps. It's not impulsive, it's more corrective, which still states we probably got to get yet another flush. And then what happens if we get the flush? Then we look at basically when it bounces again, does it look more bullish for this thing to go reversing? Or is it another one of these corrections and it continues to chop and grind lower? And maybe we end up going all the way down to our original target over here around 80. Fair enough? All right, so what did that mean? We went short the dollar index. Turning over on that daily chart, we went short, and I do expect that this is ultimately going to finish cycling down. We're engaging, looking for that to disengage, continue to cycle, and wouldn't be surprised to see the daily even start slingshotting lower in the weeks to come. In order for us to make a new swing point low down here, we're going to need this daily to cycle, then start slingshotting lower and lower. So that's kind of the plan. So I'd be careful with any type of bounce here. And we did get to a position of authority on this. So this is an absolute winning trade. No matter what happens, it can rip higher and stop us out, but we'll be stopped out for profit. We went on to say that based on that scenario, we were expecting that the euro dollar would do the same to the upside. So we're in a position of authority on the euro dollar, and we're expecting more of the same. Do we get pipped out for profit, or do we continue to go higher? I'm looking for this thing to go higher. As the dollar breaks down, the euro dollar will go up. Same thing with the pound, up about 120 plus pips. We're in a position of authority. So that means we can't lose anything. We can only gather more profit, and probably going to look for this thing to turn in like this. If I had to draw the Picasso, we're looking for this to turn over to slingshot higher and higher in the coming weeks, as this thing should grind higher toward the upside. And just briefly, as we were looking at the dollar index, we did break the one low, went to an extension off of that swing point low. Remember what that looks like. We went right to those extensions off of that low. We closed the 618 up here. We went down to the extension, and we're chopping in this zone. That's typical. You'll reach these extensions and you get a little bit of a pullback or a bounce consolidation before the next leg. But by getting down here, you move your line to this swing point low, and that says we broke below that 618,786. And even if I take it down to the next swing point low, that's still below that 618. See it? So that's why I think high probability we're going to go visiting this 9760 area. And by doing that, this thing could take days, it could take weeks. This could go up here, retest the Magic Fibo before breaking down. Maybe it's tomorrow's FOMC meeting, which we're going to discuss in great detail in a second. But maybe it's the FOMC that pushes this thing lower. We'll see how, or does it make it pop to find resistance and then drop? We'll see how that plays out. But this is why I'm staying short the dollar index, because if it does reverse and stop us out, it'll stop us out for profit. If the euro dollar and pound dollar decide not to keep ripping up because the dollar doesn't rip lower, then it will turn against us and will stop us out for profit. But that's why I'm going to sit in that position of authority, expecting that to happen. And if it continues, great. I expect the dollar will break down, the higher percentages to break down, which means the higher percentages for the euro dollar and pound dollar to go up. But as I was showing you how this shows those extensions, we then get to these extensions. Then from this low, which was our latest low, up to the current high, we get to these extensions off of that move. Then we're below the 618 and we rinse and repeat. Alan, we go down to that 95, 95.17, 95.11, 95.60, which is below the new recent swing point low. So that's why I don't think that wave two is done. I think we're going lower. You throw that in the mix and you say, okay, the inverse of that is the euro dollar. We talked about buying the euro from this bounce, went up 100 plus pips. We did this a few times. We got in expecting a bounce, was at the end, and then we eventually came down here, got into position of authority, got pipped out for profit. Got a position of authority, got pipped out for profit. We're in a position of authority. Do we get pipped out for profit? You keep doing that, and I love trading Forex. I like trading stocks, futures, commodities, ETF, treasury. I treasure them all. The more the merrier. Just focusing on what you know. So this, even if we go down and test from the low to the high, roughly that 618 level, then we still could expect the bounce to go higher. So that's why we're in that position of authority, expecting that this is more likely going to grind higher than it is to break down lower. But even if it does, rinse and repeat, right? That's what we're talking about. So we're up, we're in a position of authority. Well, you can do the same from the recent high to low. We took out that 618. We haven't quite reached the extension just yet, but it still says this euro dollar has upwards of a 75% chance we go into 116.77. 70 plus, we go to 116.98, basically 117. So this is why I expect this stair step to continue and we start reaching those extensions. What happens when we get to those extensions? Well, you do the same thing in the inverse relationship. You take that from the swing point high, and that would be above the 618. So now we're looking at this 117, 116.90, 117.16 level. And we continue to push that where you can see that one is, I'll just leave that there and remove this for a second. But now we're talking about this swing point high to the low. And look where that 618 is. We tested it, but we didn't break it to the upside yet. So that's why if we get to those extensions off of that move we showed you a moment ago, I'll go ahead and put it back just so you can see what those are. From that high to, whoops, let me do that again one more time. From that swing point high to this swing point low, we already took the 618, but when we start getting up here to that 117 level, that then puts us above the 618 off this high to low. That puts us above that 1618 level, right there. And that would say we then go into this 117.50, 117.80 area. We start getting there, then from the recent high to the low, we're above the 618, right around that 1750. So all of a sudden, Alan, we started targeting this 116 area. Next up is the 117. Then it's up here 117.50, 117.80. When we get there, then all of a sudden we get a few 100-point pop to where we start targeting 119.80, 120.30. See it? So if this continues the way we're expecting, this thing should keep stair-stepping higher, swings, ebb and flows, but this thing should keep stair-stepping. And when you ultimately get to your extension, you sometimes take a reversal. And then you get a nice little pullback, and then you reverse and go higher. That's part of the plan, right? Everybody see it? So the modest opinion, my humble opinion, is that the euro dollar is going to continue. This is the pound dollar. It's going to continue higher, reaching some targets. And the euro dollar is going to continue higher and reach some targets further up the food chain, which is up here, much higher off the chart. So I think this is going to turn over and slingshot higher. We're going to keep grinding. And that's just based on our rules that from high to lows, you look at this as an uptrend, most recently for the last 3 years. Remember our conversation 3 years ago. Not only do we come down to this 102, we talked about buying this dip. We're up thousands of pips off of that bounce. But we talked about it 3 years ago when it was at 0.95. I made a bold statement, not a prediction. I'll leave that for the prophets, but everybody else and their brother and then some predicts. I predict this, predict. Well, I'll leave it to the prophets, and I can anticipate with the best of them. But I did say back here we were going to make thousands and thousands of pips on this bounce. And at no point was this euro expected to go break out to all-time highs again. It's just simply a retracement from that 160 area all-time high down to the low. And this is just a retracement. We're looking to get somewhere in a 618 to 786 zone. So we kind of were targeting about 140, somewhere between 136 and 147. So somewhere in that target zone is where we believe we're likely going to grind to. If that plays out, the dollar has to continue to break down, the euro continue to break up. But we said that 3+ years ago, we were likely going to go thousands of pips for this retracement. And so far, so good. Right? That's the big picture. The pound's in the same boat. We're talking the pound from all-time highs down to the low. When the pound was down here at 103, I made a statement saying, man, that was a way overreaction. I didn't expect it to go quite to 103 near parity. I was expected to be more in the teens. And when we saw this, I was like, man, this is a great time to go long the pound dollar because we're expecting a retracement. Even if we can get a 50% retracement out of this, that's 157 from 103. That's over 5,000 pips to get up there. I like the move. And we're up thousands of pips, and we continue to buy the dips in the uptrend, expecting this correction to continue. And ultimately, once it's over for the euro and the pound, what's the bigger picture? Well, you come out here to the euro dollar on a monthly chart. Actually, I have it on this correction chart. And all we're looking for is a bigger ABC, right? And it's like, well, Gary, I want to know how I make money today. I'm not worried about if it takes, 5 years or whatever to get up here and another 5 years to come down here. This is part of an A. All of this chopping action is basically working on a B, and then we're going to come back down in C. So are we going to get up here by the end of this decade? Is it going to take another 3 years? 2 years? How long is it going to take? And do we get that high before we reverse back down? But by the time we eventually get to the B and we come down in that C, we might be into the next decade in 2030. That's the big picture. Short-term picture, expect this pound and euro to climb higher. The pound's pretty much in the same boat from that bigger picture. We're just expecting, I'll just go to the monthly on this chart. We're expecting that high to low, that bigger correction, and then we come back down. Fair enough? All righty, so I'm expecting in the months to come, the monthly's going to turn over in slingshot higher. Monthly turns over in slingshots higher. What are we doing now? Monthly's in the process of turning over to slingshot higher, in my humble opinion. And the bottom line is, as long as that dollar continues to make lower lows, the euro and the pound will continue to grind higher as that grinds lower. Fair enough? All righty. What about pound yen? Pound yen is up in the extension zone. I'm still looking for a short on this thing. It keeps grinding, so I'm very leery about being long. So if you are long this, you're getting near those extensions right now. You can see on the smaller scale, we're into the extensions right now. I would not be buying the pound yen with the expectation this thing is going to go up thousands and thousands and thousands of pips higher. Years ago, back during COVID, I made a bold statement back then in 2020 down here that the pound yen was about to go on a run that would take several years, and it was going to go back to that swing point high and make a new high. That's in the archives. It did this. And when we finally broke above those highs, we ran into last September, August zone, which was the carry trade unwind. Unwinding of the carry trade is what they said. So this was very impulsive. Doesn't look like much on a monthly, just like a big red candle and a big rejection wick candle. But it was a huge move down about 2,700 pips from the high to the low. And that was very impulsive. So you start backing this down to like a 3-day or even a weekly. And you look at that price action. That was very impulsive. So it still looks a lot more impulsive there. You go to a 3-day, looks even more impulsive, meaning it doesn't look like a 3-wave correction. It looks more like a 5-wave down. Well, if this is an uptrend and this is corrective, then this is likely the A. That big move down, 2,700 pips of it was the A. All this overlapping chopping, and even as this thing looks like it's breaking out, still looks like the B. And we still likely, more than highest probability, need to come back down here in a C. So far, so good. So I'm looking to establish a short position. I've been doing it for months. We get in, make a few hundred pips, we get pipped out, get in, make a few hundred pips, get pipped out, and now I'm looking to short this thing again, as we expect that the pound yen is more likely going to end up selling off than it is just to continue to go higher. So if you are long, I would state that I would not be in a position, I'd definitely be in a position of authority, because I expect this thing's going to go reversing. And this price action says we're likely coming back down toward 180, which is again over 2,000 pip move lower. And if that doesn't convince you that something's amiss, look at what's happened in the past during market financial crisis. What happened? Dot-com bubble burst. This thing plummeted 9,000 pips. We go into the 2007 financial crisis. It went down over 13,000 pips. So, Elizabeth, I'm coming to join you, honey, is the next financial crisis. That's what I'm calling it. In honor of Red Fox, Fred G. Sanford of Sanford and Son. Elizabeth, I'm coming to join you, honey. Got his little bow legs, and he'd sit there and rattle back and forth. I used to love to watch that show. Elizabeth, I'm coming to join you, honey. Here comes the big one. Well, that's going to be my terminology for the next big financial crisis. And it's looming. It is definitely looming. Is it going to be in 2026? Is it going to be in 2027? I do still look for a blow off top in the markets. Then we get the big one. But this is telling me my monthly is overbought on the software. The weekly's overbought. The daily's overbought. And extremes, so I'm looking to establish a short position like I've been doing and then make some pips. It pips us out, but this just doesn't look like it's ready to go blasting off to new highs. It looks like it needs correction. And if we do get the next financial crisis, then history has shown it goes down huge during a financial crisis. Amen? So what if we split the difference between the 9 and the 13, and we do 11 this time? Well, you got to pull that little level. Is it 208 where it stops? Do we go just a little bit more? Either way, I'd be very careful, because when the next financial crisis hits, I want to be on the short side of that equation. That's what history has taught us. All right, let's move on to the markets. ES is still, we believe that we're going to get a big market financial crisis happen. And Alan, what's interesting, if you go back to the same 2009 low off the financial crisis, that was a dot-com bubble burst. And then we went into 2007 financial crisis. We bottomed in 2009. Ever since that low, we've never had a 618 retracement. You continue to take the low, no retracement, no retracement, no retracement. And you look at that and go, well, we're due one, right? And look at that parabolic move. Psychology of a market cycle, you typically start to come back down toward the base. So at some point, probably our next financial crisis, which could be as early as next year, we're probably going to get to look for some sort of 618 retracement. Now, we don't know at the exact top. I'm kind of looking for 27,000 on NASDAQ, somewhere around that 7,000 to 7,200 for ES. And then we start getting a bigger pullback. Do we get a 618 out of that? Well, just remember to have that on a charting platform somewhere. Just wherever we top out, we can see where that level comes in. But I'm anticipating we're going to come and visit the monthly Magic Fibo, monthly chart Magic Fibo, which is not quite the 618, but it's sitting around a 50% retracement. But I would not be surprised to see it come down even further and even test that. In the short term, what is the market's going to do? I think we got a correction coming before we get that blow off top. This is kind of my arrows I drew the last few weeks, that we're likely going to grind higher, then we're going to get a pullback, then we're going to get the last push into that 7,000, 7,200 bubble up here. That's where we're headed, but do we get the correction first? Could it be, and just start drilling down on this, like a 1 hour, this most recent move from this recent correction, is this that, there was the last pop to new highs, and then we got this little correction. Is that the 3 wave and we're ready to go blasting off for the blow off top? Or do we need some sort of correction lower? And the reason I'm leaning more toward lower, we have FOMC tomorrow. Maybe if we start just holding and chopping in this zone, we get a little sell-off in the FOMC, and then we get the reversal pop after that, maybe days after, or immediately after when he starts jawboning tomorrow. But this does not look like it's very bullish to go breaking out. So the key is what I said the last couple of weeks. That 6,800 support zone is going to be critical. If we start breaking below 6,800, then I'm looking for that bigger correction to bring us down to this 618 level, somewhere around that 6,000-ish level. And where does that come from? Our recent swing point low up to the current high, and we've got to move that just slightly because it has changed. We did go to that high since the last time we've done this. So that 618 hadn't really moved much because it wasn't much of a difference. But this is probably where we're headed. If we don't go blasting off, or if we do even start grinding between today and tomorrow, we're just kind of chopping in this zone. This looks to me like it wants to push lower first. And that's kind of what we anticipated a few weeks ago. During this rally up, those were those red arrows, we talked about this going lower, then we get the blow off top up here into our big bubble. So one way or the other, markets can do whatever the hell they want to do, but more than likely we're going to get a correction before we get the final blow off top. Amen? And if I drill down to these lower time frames, like the 1 hour and the 30-minute, and start zooming in on that, this looks more overlapping and bearish than it does bullish. You could say, well, that could be the A, the B, and the C. But look at how, since that low, what are we doing? We're overlapping. We had a pop, we came down, we had a pop, we came down. So we're overlapping again on that initial move. So this could be the fact that after that last pop, this is part of a 1. If you like doing Elliott wave move, that's a 1. Let me clean that up and start that over. So this looks like, sorry, it's this way. This looks like from that high, this looks like the initial move down is a 1. Little 3-wave correction is the 2. That looks impulsive, so that's more like a 3. And this chopping overlapping looks more like a 4. and we probably need one more push lower. Well, you don't get a correction in a 5-wave move, right? So if that's going to be the 5, then this really can't be, it has to be a 3-wave correction for us to then go breaking out to new highs. For us to go to that blow off top, which in my humble opinion is a done deal, we're going to get to 7,000, 7,200 or even higher, but this still looks corrective. So if this is the ABC, this is possible that that was the A and not a 1. And this is a 2 instead of a B instead of the 2. And that was the C. And this is the end. But the problem with that right now, if that was the end of that little ABC and we're ready to go blasting off, then this does not look like a clean 1 up, 2 down. Looks kind of weird and overlap. Then we got this little move, then we got up, and then we came back down, then we went up, and we're bogging down under that magic Fibo. That's why it looks more like this is more like that 1. Here's my marker, not the arrow. 1, 2, 3, corrective 4. We still need one more push lower 5. And because you can't have a 5-wave down for this thing to go higher, that's probably the A. Then we get some sort of correction in a B. And then we finish another push lower in a C. To then finish the correction, then we go blasting off. So, Emil, I'm not convinced that this is the end of that correction and we're ready to go blasting the new high. I am convinced we're going to get a new high up here at 7,072 or even higher. There's my big bubble. So I'll go out to the daily to shrink it down and show you what that looks like. I'm definitely thinking we're going to the bubble up here, and I need to move it now. If I can grab a hold. Slide over here, buddy. Yeah, you come out that way. I'll move this into the future. So be careful. I'm not convinced that we're ready to go blasting off just yet. Well, a couple of things. If we start drifting higher into tomorrow FOMC announcement, then we're probably going to see a sell-off. If we go pushing much lower and we drop, say, 100 points today, I mean, it's still early. We're up 7 on this ES, which is your futures. Why do I look at futures? Because there's not a lot of gaps in futures. It runs 23 hours a day, 6 days a week. It's got more price action than SPX. SPX is the cash index, and you get gaps on this thing all the time because the markets close and then they reopen the next day, where ES looks at overnight price action, and I just look at it for that reason. I do trade futures, but I'm not trying to tell you have to trade futures. I just trade both. So that's why I look at ES so frequently, NQ, all the futures versions of this, because there's a lot more price action than the cash index versions because the market's closed. Got it? So in closing on this, this still looks like we need to go lower. And that's kind of what we said last week when I talked about a bounce and this thing running, likely going to get a correction before we then do that blow off top to just bring the bigger picture in here. That's kind of what we were discussing on that higher time frame. This, you get your correction, then we go blow off top, then we look for a much bigger correction after that. Amen? So any questions on ES? Well, like I was mentioning, we have FOMC tomorrow. Alan, we got a problem. Let me change this from that blue to the tan color. We have a problem with potentially the Fed raising or cutting rates here. Let me review this in case you've never seen this. This is the DGS2, which is a 2-year Treasury note, maturity rate. And the Fed, you think, well, it's the Fed that makes the decision when to cut rates, when to raise rates, right? It's the Fed that decides that. Well, no, the Fed actually chases the rate. When the blue line, which is the 2-year maturity rate, it starts tanking, the Fed cuts rates. When it starts ripping higher, the Fed starts raising rates, and it's what they do. They chase it. Remember this last section here, when inflation went out of control, this started ripping higher, so the Fed had to chase the rate, and they raised it at 0.75, 0.75, 0.75. They've never done that ever before. Well, look at that streak of the 2-year maturity rate. It didn't gradually start grinding higher, it just ripped higher. So they had to raise rates accordingly. I think they raised it a little too high and they should have stopped. And then they started doing this process. But look at where we are now. This freaked old Powell out the last time when he cut rates into the election last year, which seemed more political because he did 50 basis points coming in here. And what did the maturity rate do? It crossed back above. I'm sure he was like, you remember Ralph Cramden on the honeymoon? And he'd get in trouble with Alice. He'd go, humming, 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 humming. So I'm sure he was, his rear end was humming, humming, humming when he saw that spike above, going, good God, I just cut 50 basis points. Now I might have to raise rates again if this thing goes taking off. Well, it ended up coming down. But look at us now. We cut rates again, and now we're very close to where price action is. This is not conducive to him cutting rates tomorrow. Think about it. If he cuts rates, we're going to go from 3.88. Remember how that works? You got 4, you got 3.75 kind of in between the rate level. So we cut another 25 basis points. You subtract that from this midpoint here, you're down about 3.63, off of that 5 would be 3.63. And if we're at 3.63, which puts us about right there, that's pretty close to current action. See it? Where the current maturity rate sits. That doesn't give him a lot of wiggle room that if he cuts rates tomorrow, we're going to be right at this thing, maybe popping and crossing above. Then what's he going to do? The humming, humming, humming again? Freaking out, going, well, does that mean if I cut rates here, next go around, we're probably going to have to raise rates because this 2-year maturity rate could go higher? And whenever the maturity rate starts crossing the Fed rate, we typically have some financial problems. So I wouldn't be surprised if he does cut rates, this thing starts going back above. And when does that happen? Go back to the big picture. Most people don't even look at this and know anything about it, but it's quite an interesting tool. When the Fed rate, we start getting above where the Fed rate, we come down, the Fed rate ends up getting higher and you get a crash. Well, we're there now. So that's why it's still looming. Go back to the dot-com bubble burst. Same kind of thing. Fed rate was higher than maturity rate and it fell off a cliff. Boom, financial crisis in 2007. Here's the dot-com bubble burst. So whenever that type happens, after they start cutting rates, and then all of a sudden this thing falls off and you get that gap zone, it typically set up a financial crisis. So what is setting up yet again? It's eerie. So there's many reasons why I think, Elizabeth, I'm coming to join you, honey, is inevitable. Plus the markets have shown we haven't had a 618 type of retracement since 2009. That's forever ago. So right now, Alan, this is very eerie because is he going to be able to cut rates? Because if he does, there's your 3.88 rate. So I'll zoom that in so you can see that clearly on this daily chart now. He doesn't have much room. We cut that down. That puts us at 363. And we're at 356 right now. That is not a lot of wiggle room for this thing to go blasting off. And that would freak him out. Because I know you could see what he'd said in the prior. When this baby started climbing back above, that time he did the 50 basis point, and then he saw this thing ripping back up. He's like, holy moly. If this thing continues, I'm going to have to eat some crow and start raising rates instead of cutting rates again. When he kept saying we're going to cut rates 3 times in 24, 3 times in 25. How did that work out? This freaked him out, and he stayed just silent watching for months. Hold rates, hold rates, hold rates, hold rates, right? Through that several meetings. And then now we cut rates and we're getting awfully close. Last time I said the same thing. What did I bring to your attention? I said, we have plenty of room to cut rates. I think he's going to cut rates. He did. Now look at us. We don't have a whole lot of room from where we currently are to where we would go to. So I'm going to move this green line down to that 363 area. That's where you would take 25 basis points off of that. And that puts us right around the Magic Fibo / green line. And that's pretty close to where price action is. So I'm not going to tell you, I guarantee he is not going to cut rates tomorrow. But if he doesn't, I would not be surprised. Now put 1 and 1 equals 2. What does that equal in the charts? Emil, what does that equal? We come over here to ES, which we were looking at. Come over here to ES. If they don't cut rates, you think the market's going to sell off? I do. Disappointment? We could see that sell off. So what if he doesn't cut rates tomorrow? We could see that big dip down and then the reversal. So what if they don't cut rates? Does that mean this is the beginning of the end? So any questions on ES? I'd be very careful with this, especially if we rally a little bit into FOMC tomorrow and he doesn't cut rates as the market's expecting, then we could see that sell off. I'm just leery of this current price action we discussed when we first went to this chart, talking about this looks a lot of overlapping price action, and we may see more downside before we get this thing to finish. So I still said this about a week plus ago. We take out 6,800, we're probably going to go down around that 66. What is that? Let me go back to the daily and show you the bigger picture. So if you're trading ES or NASDAQ in these markets, watch these support levels, because if we don't hold, we could even get a much bigger flush down to the Magic Fibo and even make a new swing point low. But the first area would be we take out 6,800 zone, which is a battle zone, former resistance up here, turn support. Over here was resistance, turn support. So that 6,800 level is critical. And if we sell off and start getting below that, the door's ajar to come down here to this 6,600. What is that? That's from the recent low up to the high. That's looking at this zone that if we can't hold 6,800, highest probability we're going to go down a couple of hundred points. The only way that we might get a pop tomorrow after FOMC is if we start selling off and we come down like 100 points today, then potentially we could bounce off of that. But on the smaller time frames, this little chopping, grinding looks eerily the same as something that happened back in 2022. Notice this price action, we kind of went down, we recovered, we kind of chopped. We get a correction, then a blow off top. So let me go out to probably get it on a weekly to show you what that looks like. Come back to 2022, and it happened in December, interestingly enough. So I'll come back here into 2022. Let me zoom in on this. This is a weekly chart, so if I go back to the daily, it'll look even better. But into this 2022, we have, let me go to a daily, and let me find that 2022. I'm going to show you this because it's kind of eerie again about price typically tends to repeat itself. And coming into December 2022, this right here, we got the pullback, we rallied, and we kind of topped around right there. We got a high, we pulled down, we started messing and chopping in the zone. We got a hardy pullback, then a blow off top. Kind of sets the tone what I've been talking about. See that? Let me get my big arrow. I know what I'm missing. I'm missing my big arrow. So let me open and get that real quick. I love my arrows. Get my arrows going. 1 second while I open that and kind of illustrate this price action, which is eerily the same. Very much so. So we come back over here and get my arrows. But I thought they opened one more time. Get those arrows going. All righty, get my arrow. Now close that. Here we go. All righty. So this is back in 2022 in December. We got a pullback. We started to rally and we didn't go on. We kind of chopped around right at the previous high. Then we consolidated and we had a nice dip. Then the last rip kind of fits the tone what we were talking about with those arrows, that we were going to go higher, get a pullback, and get the last blow off top before we get a bigger correction. And this is in the same time frame, December back in 2022. And what set off when we went into 2022 going into 23? You got to kind of zoom this in. But we had a big, and we pegged this one too, going back during those recording, that we were going to get this big pullback into 2022 because we had that just parabolic run and we needed a much bigger correction to offset that big parabolic run way back then. Now, Alan, as you look at that, it looks very similar. This little top where we kind of made a new high, we got a pullback, then we started testing. It looks like we were going to break out. We consolidated, got a big retracement, a nice steep retracement off of that. And then what happened? We got that last blow off top into 2022. And then what? Boom. We got the big massive correction thereafter. So we come over here to current price action and we pull this into our perspective and look at how similar this looks. Let me zoom that way in. You can see how I had my arrows looking at the same scenario. I didn't mean to move that. I typically grab it when I don't want to. And then when I want to remove it, it doesn't cooperate. But we had this pullback and we're grinding back in toward the previous levels, just kind of consolidating. So this would fit that same mold. We got the pullback, we got this move, we consolidated, we got a deep retracement, followed by one last blow off top, which would put us into 2026. And then we go into 2026. Maybe this pushes us in through most of 2026. We start getting that big move down. Fair enough? So what am I trying to tell you? Be careful with this rally. If you're up and you bought this little dip, great. Because again, when we look at the DGS2, that is not feeling real warm and fuzzy about his cut, because again, we come down to that 363 area and we're very close to that. If we subtract 25 basis points from this number, that puts us at 363 where this green line is sitting. And look where the maturity rate's sitting. There's not a lot of room there. So I'm not going to try to tell you, well, I guarantee, bet your life, he's not going to cut rates tomorrow. But I'm just opening the door for you to say that it's very unlikely that he does, or put it this way, I wouldn't be surprised if he doesn't cut rates tomorrow. And if he doesn't cut rates, what does that do to the charts? And that kind of sets the tone that we'd get this bigger pullback. Fair enough? And I've been long that move, looking for that to go higher. Remember, I guess I got to open these again since it crashed. So I'll open that real quick to show you. I've been long those, expecting this bounce, but I'm looking for a retracement before the bigger final blow off top going into the end of the year, maybe first quarter. Fair enough. So let that open real quick. Hopefully I don't crash again and I can finish this class. That would be a great thing, and hopefully I can splice all of these together. That's even better, and make it a flawless recording. We'll see how that works out, but that is the plan. And be careful. I'm just throwing it out there. If he doesn't cut rates, the market's disappointed tomorrow. We could easily see a sell-off. We take out 6,800. Watch that 6,800 zone. We take that out, then we're likely going to make a move down toward this 618 level around that 66. So I'm looking for somewhere about a 200-point sell-off. Got it? That's kind of the plan. Is it going to be going into today? Especially if we start rallying into tomorrow, that really sets the tone for the pullback. If we were to all of a sudden just have a crash of a day and we start pushing down 100 or so points today and we start pushing toward that 67-ish level, then we could see the pop tomorrow after FOMC. So it's not always, well, if he cuts rates, the markets are going to pop. And if he doesn't cut rates, they're going to be disappointed. The market's going to sell off. It's typically more about what he says after during his announcement than what the fact that they either cut or did not cut rates. But I'm leaning toward this pullback, so these bounces, be awfully leery about them, because yes, I do think we're going to the bubble, but are we going to get a correction first? And even as we were drilling down to those lower time frames, it kind of feels like we still need some sort of additional pullback. Amen? It's possible that could be the A, the B, and the C. Well, one way to tell we're going to get more bullish is, Alan, you come up here to swing point high to swing point low. We got to clear the 68.70, 68.90 zone. So this is an area we need to clear. What does clear mean? It means we need to close above that level with a candle body, not a wick, not just wick up there, but the actual body we need to close above. And I'm going to put that as a pink color for resistance right now. So is this the, A, B, C? We're over and we're ready to go ripping. And this is an ugly, but could it be the 1, 2, and we're going ripping 3, 4, 5? It's possible. It does fit the mold where we're going up here to our bubble. That is the plan. But do we get the correction first? I'm still leaning more after this overlapping type of price action. We probably need one more flush. And then the story behind the flush would be, well, that DGS2 made the Fed nervous and he didn't cut rates like the market's expecting, and we get a big sell-off. So be extremely careful today going into tomorrow. And if we don't go ripping higher and rallying, and the more we even rip higher today, the more likely we're going to get a sell-off tomorrow. Because this picture is not conducive, because again, cut 25 basis points, we're right at where that 2-year maturity rate is. A little too close for comfort. So that would be my rationale. Well, why didn't he cut rates? Because of that. You cut rates, you're right at the current maturity rate, and typically he likes a little bit more wiggle room. Like last time he kept going and holding it steady up here. Look how far rates were away from there for him to cut. Then he did 50 basis points, and then all of a sudden he got, ooh, that humming. Then it freaked him out for him to hold it for basically December to now, a year. See it? He kind of held rates for almost a year when this baby started ripping back above where the maturity rate went above the Fed rate. Does not like it. Took him a year to get over it. Then his Maturity rates started to fall. He then cut rates 25 basis points. Everybody see it? So that's why, rationale wise, I could see him not cutting rates tomorrow, because by doing so puts it right at the 25 2-year maturity rate. Not a lot of wiggle room there. So that might be what disappoints the markets tomorrow and has this pullback we're looking for. So be careful on this number today. If you're trading ES and you're like, Gary, I'm up 14 points, man, it's going much higher. You said it's going to 77,000. That would be another 130 points. And even 7,200, that'd be 330 points. What are you talking about? I want to stay long. Be careful. Take your profits and be in a position of authority on any type of move, because I do expect volatility going into tomorrow. All right? What about NASDAQ? Kind of the same picture, right? Kind of the same. Is that the end of the three-wave move? Or is this the beginning of that last pop A, B, C, and that's the end of the three-wave move? Well, we actually made a new low, so that doesn't really fit on this latest move. You come to the bigger picture, it does look more bullish because of the reversal. Well, let me get this focus for you and bring this down. So from this bounce, we went right to the resistance zone. And yes, we did close above the 618. So Alan, clearly, Dan, Mr. Tucson, Emil, I still definitely think we're going to 27,000. My humble opinion, we're bubble hunting. But what's wrong with this picture? Even though we closed above the 618, and yes, we have a 75% chance we go into 26,700. We have a 70+% chance we go into 27,000. That's the bubble up here where we're headed. Are we going there? You betcha. In my humble opinion, we're definitely going up here. We're definitely going there. The question is, do we need this first or even a bigger flush? If that's the A, the B, and the C, we come even bigger flush before we get up there. Again, I've been saying it during that correction here. Buy the dip. If we get another dip, we're going to look to buy it. I bought that dip. We're sitting in a position of authority on these. Going back to the software, ES, we're still up. We position of authority. Still expecting this could go more, but look, the daily's getting overbought. Kind of fits the script. What would cause us to have a sell-off into tomorrow? Well, the Fed disappointing by not cutting rates. We gave you a rationale why he might not cut rates tomorrow. That DGS2, right? We continue to rinse and repeat, and look at this. This is a rationale why he might not cut rates tomorrow. And if he doesn't cut rates and disappoints the markets, then we can see this play out where the daily starts turning over and we start getting that pullback. Well, what happens if I get pipped out? Great. Then the bigger the dip, the more I buy it again. So I'm not trying to tell you this is definitely going to make a new low and we're going to have that A, B, C. It's possible. All we need is a new swing point low. But first things first, we got to get that 618 retracement. So back to the charting platform, and we go to the NASDAQ, and we can see what that looks like. I forgot it reset my program here. So 1 second while I fix that, remove that, and then go back to the charts with the candlesticks. And this big run up, we reached the extension, we got a pullback. Is that the A, the B, and we got a C coming? Or is this the end of that three-wave correction? We're ready to go bubble hunting? Well, it's no wonder we're kind of bogging down in that 618, 786 zone. Right? See it? Kind of bogging down in here. That could be the push we're looking for. And what would I be looking for a downside target? From the low to the recent high. Let me fix that. I don't need to put another one. I just need to grab that. The new high is up here now. So use the control key. It opens up this box and it'll peg your swing point for you. So we're looking for a 618786 retracement, which is just a little bit different than it was because we got a slight new change. So Alan, could we get a sell-off going into today, maybe tomorrow, FOMC, where he doesn't cut rates, the markets get disappointed? Well, we kind of said we break 6,800. We were going to go down to about 6,600 for the ES. Well, look at the NASDAQ. We started breaking below that 25.5, which is this battle zone. Kind of had resistance, resistance, turns resistance here, turns support. So we started breaking below that, say, 25. Let me get a number on that with this crosshair. We started breaking below this little box here, 25.4 area, 25.350, say. We start closing below 25.350, then I think we're going to make a move down to about that 24.6. That would be an ideal based on my arrows where we're going to rally up, get a correction before the blow off top. If we get down here, Emil, and this holds, then I'm looking to buy that. If this thing just retraces and doesn't pip us out, we're already in it to go up to the bubble. But if we get even a bigger one where this thing turns out, it says, no, man, this is the A, this is the B, and we still need to see what are we looking at. Well, you use the 3-point tool, which I'm going to run a fresh one so you can see what that looks like. Run a fresh 3-point tool, and that looks like this. And you take the high, and we use my little control key, opens this up, which makes it easy like a magnet. So you go from the high down to the low, up to the lower high. And what would we look for this to go to? This box. If we don't hold that, where are we going? We're going down here. And let me draw some levels for you. Clean that off so I can do that. First level to watch would be this zone here. Stretch it out just a little bit more. So if this is the A and that's the B, then in order for A equals C, we need to come about 23.3 area, 23,003, somewhere in that 23,000 to 23,003-ish area. Well, what if it's something more nefarious? Like this isn't the A, but that's a 1 and that's a 2. Then this should start coming down toward this zone. So this would be where my A, B, C is, right? That's the A, that's the B, and the C should come somewhere into this zone. But if it is a 1, 2, and we're going down in 3, then the 3 target should be somewhere in this area, somewhere down in here. Actually, I need to move that a little bit lower because typically your 3 makes a run down toward this 1618 extension. So just repeat. Well, like, what are you getting at? If this is the A, that's the B, and we're going to get a push down to C, we likely should find support somewhere around that 23.4 down to about 23. This is typical A equals C or A equals 1.272 of C, right? If it's a 1, 2, and we're going down in 3, then typically 3 pushes the envelope toward the 1618. Then we'd be set up with another 4, then a 5, even going a bit lower. So what am I trying to warn you of? I think we need a correction. After this run, and we're consolidating in this zone, I think we need a correction, at least pushing a move toward this 618 of the prior low, to the current high, we need a 618. This could be FOMC tomorrow, and we start selling off because he does not cut rates. And the rationale was I showed you on that chart. It's pretty close. You get to 3.63 and we're at 3.56. That's not a whole lot of wiggle room with that 2-year maturity rate right now. So that could be the catalyst that sells off. Got it? Well, what if it's much more nefarious and we don't hold this zone? What if we don't hold that? Then, Alan, if it's the A, B, and the C, we should at least come to that 23.4 slash Magic Fibo, get a new swing point low, the Magic Fibo slash that 23.4, maybe 23 area. If it's more worse than that, then it's the 1, 2, 3. Then we're talking about pushing down toward 22,000, 21.8. And if we see that kind of sell off, then I'll expect another recovery and one more push. Any questions on that? You can do the exact same thing with ES, right? Exact same thing. So I'll remove these just to show you what that looks like so everybody can focus on the same thing. And we know where the targets are. We're going to 77,000, 7,200 is the bubble. But this most recent price action, I'm going to put some fresh levels in here for us. Let me get these out of here for a second, just so it's a nice clean chart. And if this is the same, use that 3.2. You got your swing point high up here. You got your swing point low. And now we're looking for that lower high. If we sell off of there, what would we be looking at? Same kind of thing. From the recent low to high, if we don't hold that 618 zone, then it's setting the tone for a new swing point low. And where's the typical area we might go? And that is this 64.70 area, 64.4 area. And what if it is the better scenario? That's the A. This is the B. And we sell off in C. Then this would be my target zone right around that 64.70 slash 6400 would be the zone for the C. But what if it's more worse than that, and that's the 1, this is the 2, we get a 3, then we're talking coming somewhere down in this area for our wave 3. And if we get selling off, we don't hold that box, we come down here, we don't hold that, and we end up coming down to the 6,200 zone, then I would look for a bounce 4 and another push 5, even pushing us even deeper, which guess where that's sitting? That's the daily Magic Fibo. What's that one? That's the 3-day. So keep these on your chart, right? What's the next one? That's the weekly. Yep. And what's the next one below that? That's the monthly way down here. So what am I trying to tell you? We're going to get a blow off top. Once we get a blow off top, Elizabeth, I'm coming to join you, honey. Is it going to be this one? Well, we're going to get a significant pullback no matter what. Even if it's not the market crash, once we hit that 7,072 or maybe even a little higher, we're going to get a big correction. And I'm not just talking maybe a daily type of Fibo retracement. Is it a 3-day? Is it a weekly? Is it, in fact, the Elizabeth, I'm coming to join you, honey style? We shall see, but I'm looking for a big pullback after that. So in closing, to the short side, be careful. This tells me a picture that the Fed may not cut rates tomorrow. How? Remember the rule. We cut 25 basis points. We're at the 363 zone where this green line is. That would be 25 basis point cut, and the 2-year maturity rate is right at it. He may not cut it. What if he doesn't? That should tick off the markets. And we got that. So here's the line. So Harold, we got very little room. If he doesn't cut rates because of that, then ES is setting up for something more nefarious, and we get that correction I've been looking for. Last few weeks, we talked about rallying, and then we look for correction, then we look for the blow off top. That might be what it takes. He doesn't cut rates because of that chart, that DGS2 slash 2-year maturity rate, Fed rate is too close. I think that would spawn a sell-off. We don't hold the 618 retracement from the low to the high. We don't hold the 618 retracement. What happens? It sets up the tone to the Magic Fibo. And even if this is an A, B, C, we're right at it. See it? So let me bring my letters back. If this is part of that initial, that looks three-wave, and this could be the blast off. And yes, I do think we're going to blast off and go bubble hunting, 7,000, 7,200. But is this the A? Is this the B? And do we still need the C before we go bubble hunting? Or was this the three-wave move already? And this is just part of that correction before we go bubble hunting. And then you could do the inverse like I did the three-wave tool down here, 3-point tool. We could do it the opposite way. Well, Alan, what if we do get the blow off top? What would that look like? And notice these levels. From that low up to that high, we get a retracement down here for a 618 type of zone. Look at the measurements. See it? 7,000, 7,200. This excites me when I look at this. Is that the 1-2, Emil? Going up in 3, 4, 5, and we push the 7,200? Or is this going to be the A, B, C? We get equality and just get into the barely 7,000-ish to then set the Elizabeth, I'm coming to join you. Which one's it going to be? I still say all roads, even with the pullback here or even the deeper pullback, we're still going to go bubble hunting. Amen? So in closing, be careful. I'm not convinced we're just going to go blowing up today and just straight shot. And the Fed's just going to cut rates tomorrow and the market's just going to go ripping. Anything is possible. But based on drilling down, this looks more corrective than it does impulsive. So would not be surprised to see we need to get that flush first, right? Flush FOMC, doesn't cut rates, markets are ticked off. He was supposed to, the expectations, markets don't like uncertainty, they like certainty. And if they're expecting a big rate cut and he doesn't get it, the markets could sell off tomorrow. All I can say is we get the big sell off, maybe down to here, then I'm looking to buy. If not, just like we talked about buying here, being in a position of authority, if I get pipped out, I'm going to look to get back in. If we get a much bigger correction where it is that ABC and we go much lower, then I'm going to start looking to buy down here because I do think we're going to get that blow off top. What about Nikkei? Nikkei is my global liquidity barometer, right? Let's zoom in on this one. Global liquidity barometer. And this is looking potential ready to go blasting off. We're testing the all-important zone we discussed the last few weeks. From the recent high to the low, we got to start closing above this 51,000 area. We're kind of testing it. We tested the other day. We pull back test. So this could be the rejection we need, even global-wise. We get this pullback, we get a retracement, we need one more flush. Before then, we go blasting, or do we continue to close above that 51,000, setting the tone for the 53, 54? I still think global liquidity is going to get a blow off top. Do I have one on this chart? I guess not, but we'll put one. I do think we're going to go blow off top up here to match our markets. So this same type of thing. We move this down just a touch. somewhere between that 53, 55 area, something like that. Maybe move that just slightly higher. I think we're going to get at least toward that 53, close above 51, sets the tone. We're going to 53, 54. So you see it? So this is the blow off top. ES, blow off top is what? 7,000, 7,200. Bring that back over this way. That's my blow off top for ES. NASDAQ is up here at 27,000 and above. That's the blow off top zone. We got them all. Dow up near that 50,000, 48 to 50-ish area. What happens when we all get up here? Houston, we got a problem. Here comes the big one. We're going to get a big correction. So, Alan, when I see Dow up in that 48 to 50,000 zone, I see ES at that 7,000 to 7,200 zone. I see the Nikkei up at that 53 to 55, 54 zone. I see NASDAQ up at that 27,000-ish and above. Then it's look for a big correction. Is it the Elizabeth, I'm coming to join you, honey, here comes the big one? Or is it just a 2022 type of big correction? Either way, once all the markets are in their bubbles, what happens when you bubble? They pop and we get a drop. Got it? No ifs, no buts, no ands. That is the attachment. Only question is this thing going to go breaking out now, or we get that pullback I'm looking for, FOMC disappointment, get a big sell-off, big down move, then we get blow off top. Worst case scenario, Harold, even if that's an A, B, and we get a bit bigger pullback C, still think we're going up there. If this is the end of that little correction, and this is the beginning of that push toward the blow off top, all roads still lead to a blow off top. And last but not least, we didn't look at Russell or IWM, but this one says the same thing. From the recent high to low, we got our target up here from that much bigger move, 2,600, 2,700. We didn't quite reach it. Even on the most recent one, we're talking about reaching those extensions. So I'm going to take some of these off. Actually, I'll go to IWM. That's the way most people trade this. So we got 256, 265. That's where we're going. Maybe even a little higher, but this is definitely where we're going. Question is, do we get a correction first to get up there, or do we just keep going? What happens when we get blow off top? ES at 7,000, 7,200. NASDAQ at 27,000 or higher. Dow at 48 to 50,000 or higher. Nikkei up at the 53,000 to 54. IWM up at 260 or higher, up in this zone. That sets the tone for the big one, the bigger correction, minimum. And if it's not Elizabeth, I'm coming to join you, honey, it's going to be that 2022 type of correction. And even ES, NASDAQ, etc., what happened in 2022, it made a substantial correction. Amen? Going into that 2022, got the last little blow off top, and then we proceeded to decline over 33%. So what am I going to do when we get up here? Buy some put spreads to the downside. I like it because even as I talked about this for years now, this big run up, we got this big correction down, looks more 5-wave than 3-wave, and all this is still overlapping and correcting. This to me, kind of like that pound yen, looks like a big A. All this is a B, and we still need a C to come back down below that 160 area and lower. And if it turns out it's the Elizabeth, I'm coming to join you, honey style, we could go even much lower than that. pushing maybe 140 down to 120, up from 250, 260 up here. That's a big decline. See it? So that's the plan. Put spreads. Once we get up to these bubbles and blow off tops across the board, I'm looking to short this thing back down. And I'll guide you through that when we get there. Let's continue. What about black gold, Texas tea, the Beverly Hillbillies? This is going to be the hottest commodity. Gold's been the hottest commodity, right? Up 25% or whatever for the year, and it's just booming. Well, gold, black gold, that is going to be the one I think is going to be the big push in the commodities. And I still think we're going to get a flush. So what happens when you get your big flush? Here comes the big flush. Or are we going to do this one more pop, then a flush? All I can say is once we're down at 50 and lower, and that is the plan, for oil prices to get that last flush, technically speaking, we need one more big flusheroo right there, flush it down, then we go long. This is the one where even Josh Hartnett from Bank of America thinks, not that I respect and whatever he says is gold. No, whatever I say is. No, I'm just kidding. Based on price action, we need a flush. But Alan, I would definitely consider no buy, sell to hold. I can't tell you what to do, but what I'm doing, I'm looking to buy either USO, and this is CL, so I'll put USO next to it. I'll just change it on this chart. We have USO, which is one way to play the big bounce. So I'm still expecting USO to go lower, expecting black gold to go lower, for these to push lower, and even USO to go lower. That's one way to play it. Or if you need a little extra spice in your life, like inject it with that butter jalapeno sauce and throw on the Cajun spices on like we did that turkey. So Harry, I recommend you go back and look at the archives. I showed some pictures from the turkey and the turkey bone gumbo and the cake and all the good things. So please go back and look at that. But what are we looking at is down here. UCO, if you need a little more spice, is the leverage product. And what happens to UCO when black gold goes a ripping? It goes berserk. This thing went down here from the $2 range up to 55. So my plan, again, I can't tell you what to do, but when oil prices set an alert on black gold Texas tea, when it starts to hit $50 and lower, you need to start thinking about buying some UCO shares or some USO shares. If you don't want the extra leverage and play with a little extra spice, then I would start buying some shares, because I think black gold is going to go ripping again once we get that last flush. So I have some junk bids down here. I'm all about buy to, good till cancel type thing. Because what if I'm away or I'm doing something and I'm not looking at my computer? That's why I set alerts and I set little reminders, so I know when it's down here and oil prices are pushing 50 and lower, this UCO should be pushing somewhere in the teens or even lower. And if I can start to buy some UCO somewhere around that 15 or lower in price, and I think oil prices, when they dip below 50, are going to go ripping higher, we're going to see another one of these. Amen? This is the plan. This type of rocket ship, are we going to get it again? Yes. My humble opinion. How high can it go? We shall see. But I'm thinking oil prices can be the commodity of 2026, to be the golden child like gold has been. It'll be black gold being the one in 2026, because you can't drill, baby, drill down here at 50 bucks and lower. Price has to be in the 60s, and we're at 50 and lower. That's going to push this UCO leverage product even lower. That's why I'm kind of looking for these extensions down here, Alan. So around that 16, 15 or lower. If I hear 15, I'm definitely buying 100 shares, 200, 500, we'll see. And if it goes any lower than that, I'll probably buy several hundred. If it gets down to 11 bucks, anything down in that zone, man, I'm going to buy it, hold it for several months, and look for the big rip in black gold. So in closing, Harold, no questions asked, in my humble opinion, we're going to get a flush down about 50 bucks or lower. 52 minimum, probably into 50, because that's just a big roundabout number. And it may be one of these big flush, instant rejection type of things. So what I'm not looking to see is that oil prices go plummeting down to 50 and lower and just kind of sit down here for weeks and months, kind of sitting, chopping and stay, consolidating well below 50 or 50 and lower for any, long-term length of time. I'm looking for the dip and then the rip. What happened the last time we got down below 60? Fire rockets went off in the Middle East. They know all they got to do is fire a couple of rockets and oil is going to go ripping. So, one of two options. If you need a little extra spice in your life, so I'm going to go ahead and add that just for the chart. We'll go up here to USO, just so we can keep an eye on it over the future classes. I'm going to add that. And let's see if it showed up. Did I get it in there? Or did I take it out? Let's see. UCO, did my USO show up? Nope. Let me do that again. I don't think I'm at my max limit. Add USO. Add it. There it is. Now I'm going to move it next to my oil prices in here. And we'll do USO, then UCO. These are the two I'm looking at. I like the price better on UCO because it's a lot less. But if you don't want the extra spice, maybe buy some shares of USO because I expect it to go ripping higher as well. Amen? I'm leaning heavily to this because I like a little extra spice right there. So Harold, what happens when oil price hits 50 and lower? Start a nibbling. Get that dessert going. Get a little UCO leverage product. When oil prices dip, we want to start looking at acquiring some UCO shares. Again, I'm looking for that to go somewhere down about that 16 or lower. 15, lower than 15 is good. If it hits 11 or somewhere way down in there, that is a beautiful time to add more and more. The lower it goes, the more I add, looking for the big pop. Any questions? So again, UCO, what are we looking for? Somewhere around 16, 15, lower teens to even lower. So I have these good till cancel orders down in this area, right around 15, 13, 11. And as oil prices do what? They go dipping. This thing is going to dip even harder because it's leveraged. And then when we get down to oil prices at 50 bucks and lower, and we get the big reversal, hottest commodity likely in 2026 is going to be some metals, but black gold is one of them. And I'm looking for that thing to go ripping. How low do we go before we start ripping? But put it in perspective, we got a beautiful move last time, and it was in single digits back in 2020 when oil prices went down to nothing. But even the most recent rip, it was up around 15, and it went all the way to 55. So this is back COVID, but look at this. That's when we got that dip, and then oil prices ripped. So, yep. So I'm looking for that. I'm looking for one of these big swings, and that's the plan. Got it? And if you don't want the extra leverage, then USO is also a way to play it. A lot of liquidity in that. And buy shares or even do some options, but I'd give it plenty of time if I'm doing options on that big pop. I do think it's going to happen fairly quickly, but it could still take months for that run up. All I know is Landman is on Paramount Plus Sunday nights. They drilling and they're talking about oil in Texas here. And yes, they can't operate where oil prices are below 60. It's a losing cause, and you can't really operate because cost of goods and services get way too high. When we start getting up around 90 and higher, that's where inflation takes over and all cost of goods and services goes insane. So I'm looking for somewhere down in the 50s, and that would be black gold, not so much USO, but black gold here to get down in the 50s. Then we look to establish positions in either USO or UCO, or maybe both, and we look for the big push. Got it? All righty. What about gold? Gold's the darling. Yep, been on a massive tear, but this still makes me nervous. Could this thing just continue on in 2026? The next big push, I think, is going to go to 5K plus, 5,000 plus. Got it? But is this still the corrective action and we need the flush? How we get the flush? One of these deeper flushes, the deeper it goes, the more I like it to go and make the next run up to 5K plus. If we come all the way down to 3 plus, right there, still going to 5 plus, we may not get that deep of a retracement. But this current price action is kind of screaming, we need another flush. Likely we need a new swing point low. Why? That looked very impulsive down, and this still looks corrective and overlapping. So a lot of these charts are lining up for another flush. Amen? All I can say is what happens when gold gets way down here? Well, we can add some SLV, we could buy some things down here and look for the next big push. And that will be 5K plus plus, that 5 and 6,000 range. Any questions? So in the short term, is this layer to go breaking out? Anything is possible, right? But I just don't see this initial correction as a three-wave move. You kind of say, well, yeah, that's the A, this is the B, and that's the C. Well, they're not equivalent. The numbers don't line up exactly right. So this is more likely the A, this is the B, and we're pushing lower in C fits better. But you can see what I mean by this. I'll take this off for a second just to show you what I'm talking about. That if this is the three-wave correction, it's not proportionate. That's one problem. So you come up here from the high, come down to the low, you go to the lower high. We're nowhere near proportionate. We need to come down here somewhere. 3750, 3690 area. That would be proportionate from the A, the B, and the C. Right? So far, so good. So this really, from a daily, looks kind of maybe three-wave. But if you start going to a lower time frame, it starts looking more like it was five-wave. Look at this 4. This looks more five-wave-ish. 1, 2, 3, 4, 5. And if that is corrective, actually, I'm one too soon here. We got to go over here a little bit further. That's the pullback. This looks more five-wave. 1, 2, 3, 4, 5, right? This is overlapping corrective. So we'll likely still need that flush. See it? Any questions? So that's why when we do, or if we do, get the big flush down here, be sure to take advantage of it to add some positions for the next big push to 5K plus. So back to the daily, that's where more than likely we should come retest, because if you do the recent high to lower high, I'm going to run the fresh one off the bigger number. Let me remove that, not settings, cancel. I want to remove this and give you the bigger one. And this is what that looks like from this high up here to this low to this lower high right in that area. Look where our quality is, right here at the Magic Fibo. Isn't that a thing of beauty? A, B, C, B, down in C. All I can say again, Harold, we get that? Not a bad opportunity to add to your position. Even if we buy some here at 36 and it goes lower, and we say do a 3-day kind of retracement here, great. The lower it goes, the more I'm going to keep buying and adding and cost amortizing right there. Cost right there. Buy some here. If it goes lower, buy some there. Goes lower, buy some there. Because all roads, if we hit this, we're going to 5K plus. We hit this, we're going to 5K plus. We hit this, we're going to 5K plus. All roads lead to a correction followed by another big blow off top. Amen? All righty. Same with silver, you know the story. Oh, we're going to continue this breakout. We're reaching the extensions. We're due for a correction. Even though we're kind of chopping in the zone, yes, we did say we'd reach 60. Guess what? We're there. I said 60, 70, and I still think that's conservative figure, but we still need some sort of correction. That looks more impulsive. This looks expansive. So we still need another correction. So be careful. All I can say is you get a big dip on silver, add to your position because it's going much higher still to come. Why silver? Drones, quantum computers, everything out there uses silver, and it is a limited resource and high demand. So these prices are going to go ripping. I've shown you this many times. Back from the correction, let's go to a weekly. Back from that correction, in the archives, when we were up here at 1900, back in 11 or so, I made a statement saying that we were going to get a correction going down about 1,000 before we go to 3,000. Well, we're up at 4,000, a little bit higher than it kind of was projecting, but 3,000 was the target. Well, we still need a bigger correction. But what I was bringing reference to, from that high to this low, look at where we went. We went above the 368, pushing to 423. Silver, typically before the gold rush is over, silver catches up with gold. Well, look at where silver needs to go. And whether we're looking at like future silver straight up, in order for us to catch up, we need to be up here, up at 150, 170 range. We're at 60. Long way to go, right? To catch up. That's why my 60-70 target was so conservative, and we're already scratching the surface of the 60, but I still would like to see a correction come out of this. So any dip should be bought, targeting 60, then 70, then we start targeting 90, 100, 150, 170, etc., etc. And if it's SLV, numbers a little bit different. Look at the difference in silver, about $6 almost, roughly about a $6 range in the SLV price. So what if SLV does it? Then we're still talking in the stratosphere up around 145 to 168. And we're at 54. So in closing on gold and silver, definitely see more upside, huge upside but we still likely need a bit of a correction. This thing has been parabolic, and we really haven't got a decent enough retracement yet. So even that retracement, which was a few bucks, I don't think that's enough for that parabolic move. So be careful up here. Love to see a bigger correction followed by the next big push to 60, 70, and higher. Okay? Any questions? Let's finish up last but not least. So far, so good. Bitcoin is looking good, hanging in there. It's kind of chopping and grinding. We don't want to break the low. We break the low, then we probably got 10 months of crypto winter and we go lower. But as long as we're holding these levels and continue to break out, then it looks good. That when do we start feeling much better about this? We need to get up here. We need to get above the Magic Fibo, start pushing that 106, 108 level. We start doing that, Alan, we get this stair step and we start getting some robust numbers, get above the Magic Fibo, start pushing this 1618 up here right around that 108 zone. Then it sets the tone. We're going to new highs, which would be targeting 132, 138, new all-time highs. So this needs to continue. Any retracements need to hold 618 type of retracements. So far, so good. And this potentially looks like a 1-2-1-2. Why? They both are 618 retracement. That low to that high, perfect 618-786 zone, retraced, went up. And from that low to that high, another 618 retracement. We're popping. So this looks like a lower degree one. I guess we'll do this kind of one. I guess then we'll do this one. Then this is the other kind of one. So that's a one. This down was a two. Then this was a one, and this is a two. This kind of two, Roman numeral. And we're going in a three of three higher. And we want to see this get above the Magic Fibo, get above this 108, which is my 618. We close above that candle body, not a wick. Don't just wick up to 108 and plummet back down. We want to see this baby get to that 618, close above here, then it sets the tone. We're going to all-time highs again. So this is bullish above 108. And if we just get to 108 and then go plummeting, where from this low up to 108 high, we don't hold that 618-786 zone and we break back below that, then it looks like crypto winter. But what am I trying to get at? I think we got a very good chance we're going to run toward that 106, 108 minimum. Everybody good? Minimum. Even if it's crypto winter, Harold, I think we're going to go up here to set the tone that, uh-oh, it is crypto winter. But if we get above here, we start getting above the Magic Fibo, warm and fuzzy, we start pushing and closing above that 108, then we have a 75% chance we're going to all-time highs again. And I'm still leaning this way more than that way, and prices got to thread the needle. And so far, we're threading it. Amen? All right. Same thing with Ethereum. It's nice little pop today. That's good. We held. We're popping. We still need to get Ethereum above the Magic Fibo from the recent high to low. We got to get above this 4,000 range. So what I don't want to see, as I kind of told you, we're expecting this to grind up there. It could fail and start to tell you that this is the end of the move and it's crypto winter, or we can go blasting and closing above, setting the tone for new all-time highs. And the reason I'm still leaning more this way than the other way is go back in time from the last crypto halving to the swing point low of 2022. We already took out the 618, we took out the 786, and we haven't reached our 55, 6,000, 7,000 targets up here. Got it? So there's still a 75+% chance we're going to 55, 70 plus, we're going to 6, and even push that 733. Now, what could excite me even more is check this out. From the low to the high, we got a 618 retracement off of that. See my 618 over there? We got a 618 retracement, and it's a Magic Fibo bounce on the weekly chart. That, I know there's a lot of lines in here, but from that low to that high, we retraced a beautiful 618 out of that. And we got a Magic Fibo bounce, which is perfect. And the combo meal states that if you get the 618 bounce and it happens to be a Magic Fibo bounce combination, you typically start pushing the 1618. And from this low to that high to this higher low, that 1618 is up here at 8,000. Right? So let me move some of these real quick just so you can kind of see what I'm talking about, because all you see is a bunch of lines. Gary, I can't see a darn thing, buddy. All I see is lines everywhere. I don't know what you're talking about. Here we go. Clean it up. From this recent move, and I even take this one out. Let's get it all cleaned up. These are fine. So use a 3-point tool from this recent low up to that high. And use your control key to get your magnet going. To that high, to this higher low. See it? Your 1618 is up here around that 8,000. So Alan, this is a high probability when it works out. 618 retracement, we got that. So I'll put the 2-point tool in here just so we can focus. That's why I had so many lines in here. From the low up to the high. Whoops, no, that's the 3-point tool again. Fumble. Let me get that out of there. Do a 2-point tool, 2-point tool. From this low up to that high, we got that 618 retracement right at it. And who's right at that 618? Magic Fibo on a weekly chart. Man, that excites me. So typically, if you can get a 618 retracement bounce, and it coincides with a Magic Fibo bounce at a 618 level, that is the McDonald's combo meal. And typically, when those do play out, they push the 1618 up here. So imagine if Ethereum makes a run toward 8,000. Where do you think ETHU is going to end up? Where do you think it's going to move to? Well, last time we talked about this, making a run toward 4,000, it would go somewhere between 160 and 197. We went right in there at about 180 plus. Not too shabby. Now we got another opportunity. If that plays out, this thing could go ripping back in 200, 300, maybe even push the limit toward maybe 400. We shall see. But it's going to take Ethereum pushing that 8,000 plus for us to start getting these extensions up here. But if we just get this to run back toward and break the 4,000 and make a run toward 55, 6,000, I think it's going to push us not only back to this, but start pushing us toward that 200 to 250 range. Recalled that one to the T, right, Harold? Well, this one, if we can get Ethereum to push that 6,000 and push higher, we should be pushing this 200, maybe 250. If we can get to 8,000, let's just see what that looks like. We kind of use this little tool and we say, what if Ethereum is going to make that run? So you use your price tool right there, date and price, and we're going to make this run toward 8,000. That would put us about 200+% gain. You do that leverage product for a 400% gain, that puts us up here around that 380. You can already see my numbers there, right? No, that's the seven. No, that's not that one. It's the other one. Take that out. So if we get a 400+ point run for 200 on Ethereum, and we get the 400+ point run, that would put us in this zone. So somewhere around that 250 zone. Kind of what I was saying, 250, 200 to 250. I like it. And we're sitting at 72 bucks and we could go to 250. You betcha, buddy. You betcha. So no buy, sell, the whole recommendations. I still, back when this, before that splitsy right there, I had $4 dip, ran up to 12. So I had hundreds and hundreds of shares, took profit, bought them again, kind of bought my way lower. Then I said it would run to that 160 to 190, took profits there. So this is markets money, markets money. And why not third time the charm, right? We did it once, we did it twice. So let's do it again. So again, I can't tell you what to do, but I own shares of this. I even bought some of ETHA, and I'm already up several dollars off of that bounce. And is this the beginning of that run? How hard can this go? Well, if Ethereum goes ripping toward 8,000, then this should be somewhat equivalent. This one isn't leveraged, but we should get some sort of move. Like last time, it went from 11 up to 36, more than a triple, almost a quadruple. So a good triple. So if we triple from 20, that would put us somewhere around 60. Can we get up there? Yeah. Look at this. In that same breath, it's already there, but I'm just going to clean this up so you can see the numbers easier. What if we do a similar type of move where we use the 3-point tool, and from that swing point low to that swing point high to the higher low, 61? Can we get something like that on ETHA? Maybe. I'm not guaranteeing it, but all I can say is, will ETHA go much higher if Ethereum goes ripping to 6,000, 7,000, even 8,000? The answer is overwhelming yes. And if you need more spice in your life, ETHU, I just went over. So in closing, this looks good. So far, so good. After the correction, we've been holding those 618 retracement. We, from that low to that high, got a scare dip, but we closed above that 618. Now we did the recent move, same thing. This is on a weekly, so you go to the daily, you can see what I'm talking about. From the low to the high, we held our support zone. Wick down here, but wicks don't count. It still held. We went on a new high. We got another retracement from the low to the high, held. Now we're pushing. So the key is this thing needs to get above the Magic Fibo, and we need to start pushing up to these extensions up here. But we want to see ultimately Ethereum from the recent high to low. I think I took all those out. From the recent high to this low, we want to see us close above that 4,000 range, basically take this green box and extend that out. We want to see this section get taken out, and I'll go pink here because that is initial resistance. But this is the key area to watch, that if this thing rips up here and we start closing above 4,000, Harold, then the door's ajar to go 53, 55, start pushing that 6,000. And that fits the tone from the bigger picture where we already from the recent high to low. We took those levels out a long time ago. We haven't reached our targets. Look how confluence of events, they're right in the same area. And if you believe in my magic meal deal here, where we get a 618 retracement combined with a magic weekly Fibo bounce, and it pushes the 1618, that's up here at 8,000. All I can say is I'll be doing backflips if this thing rips to 8,000. My ETHU is going to be in the stratosphere, and even my shares of ETHA are going to be way up. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. So join us again tomorrow. That's it. That's all. We'll see you tomorrow.